Hello everyone, my name is Saurabh Pathak. I'm the founder of Numplora. At the outset, I would like to thank for inviting me to speak at Big Data Finance Conference today. It is definitely a great opportunity for me to share my ideas. I'm going to talk about global stock markets and number patterns today. Now, at Numplora, we believe data science is about finding what is apparently not there. Now here, what I'm trying to say is, what is there versus what is not there is the question data scientists are struggling with. So there is a data, but the data that is visible to us in a normal format may not give us the greater answers. So we actually need to reach out to what is apparently not there, but which has always been there. Now let me give you a quick example of what I'm talking about here. 4 square is 16, everybody knows that, right? But interesting is the sum of first 4 odd numbers is also 16. Let's take another example. Say 5, square of 5, right, is 25. But the sum of first 5 odd numbers is also 25. So mathematically speaking, square of any number n is always equal to the first n odd numbers put together. If we sum the first n odd numbers, we reach up to the square of that number. It is very interesting. So it means there is something hidden apart from the information that is presented to us. So for us at Numplora, we believe what is apparently not there, but which has always been there, is what needs to be found out in data science, right? The second important aspect of data science for us is asking the right set of questions to the big data. Now let me give you an example. For us, the most important factor here is to ask the right second why question, because the experience has shown us that the right second why question always opens up a greater dimensions, a greater answers from the data set. Again, let me give you a quick example of this one. Now, suppose the first why question is, why does the Earth not fall in space? Because sun's gravitational force holds it together and makes it spin around the sun. Fair enough. The second why question is, then why does the sun not fall in space? Aha, you see, all of a sudden, the second why question opens up a whole new dimension, and it actually provides us far greater reaching answers. So in data science, it is absolutely required that we ask the right set of why and second why and the third why and the consecutive why question to our data so that we get the greater reaching answers. Now we talked about 2 things so far. One is what is apparently not there, but which has always been there, and asking the second why question. Now the beauty lies in combining these 2 aspects. Let's take an example. Asking the second why question to find what is apparently not there. Let me present to you a very simple mathematical series: 47.5, 67.5, 79.5, 95.5, and 111.5. This is a combination of arithmetic and geometric progression. The series is a combination of arithmetic as well as geometric progressions. Now, this is one of our discoveries, and we're going to talk about it from the perspective of a pure data science to find out what is apparently not there. Now, let me put things into perspective. This is a monthly chart of Nifty 50 index starting from 2008 till right now. Now, the red blocks are showing here 2008 market crash, 2015 market crash, and 2020 market crash. So here we see this block is actually 2008 market crash. This is 2015, like it was a little mild crash, I would say. And this is pretty violent what is happening right now in the markets. Right? Now I go back to my original series. Now, to the naked eye, it looks a plain series. But are there any far-reaching answers? Let's find out. I take the first number in the series, 79.5. Let us square this number. What is the answer we get? Squaring this number, we get 6320. Right? In 2008, 6357 was the high. It was made on 8th of June 2008, and that day onwards, the market started crashing down. Now, where do we end? Let's take the next number, 47.5. Square that number, we get 2256. Actually, on 27th October 2008, Nifty made a precise bottom at 2253. Interesting, right? Let's move forward. 67.5. Let's square this number. 4556 is what we get. Now, it has two significance. One is when the crash was happening in 2008, this actually level of 4556 worked as a parity. So it was trying to hold this level for some bit of time, but then it came down crashing below that level. That became now resistance. It attempted to break past that level a couple of times, failed to do so, and the market came crashing down to 2253, right? After a bit of time, a year or so, markets consolidated in that particular range. When the up move started, it again took a support precisely at that level, and then started with the up move. That up move actually ended in 2015. So now let us move to that number series. So this is where we left the previous slide. We started the up move, and the up move is, this is my 2015 market crash. But before that crash, what is the high it is making? 95.5 square. What is it? 9120.5. And the market high was 9119. Just missed by 1 point. Interesting, right? Where it's going to end? If we take simply the midpoint of these two numbers, 9120 and 4556, the market actually took the support precisely at that level and bounced back. Now, ultimately, it has to thrust through 9120, and then it could able to start the fresh up move. Now, what has happened is, with this data set available with us, we were trying to make people cautious, people aware of the fact that you be careful about 12,432 number. You be careful about it. We spoke about it in 2019 in one of the stock market traders conference. We wrote about this number several times on our LinkedIn posts, social media posts. And what happened on 20th January 2020, Nifty made a high at 12,430.5, and boom, the markets went crashing down. And we all know what is happening in the global markets today. Look at this. This is what is happening right now. The square of 111.5 is 12,432. And precisely from that level, the market came crashing down and actually came to 7,500 level, which is a massive, massive fall in just a matter of 3 months. So what we're talking about here is a pure data science and finding the answers which are not available to the naked eye, but they are hidden inside the story. The actual work of a data scientist is always to find what is hidden, what is not visible to most of the guys. Now, the second discovery of Arnhem Plorer is Boolean aesthetics. It is always said, and we have read it many times around us, that universe has a language and it mathematics, right? Now, mathematics has ratios, and ratios actually gives birth to patterns, similar to Fibonacci's wave, right? Now, the similar idea was drawn to us when we thought about Boolean aesthetics. What it is, what is the idea behind it? World has 7.5 billion people. Now, what is common amongst us is our bone structure. And what differentiates us is our aesthetics, right? So all of our bone structures, you go to any country in the world, you have similar proportions, and that's why we all look like we are humans. but the aesthetics are different for each one of us. That's how we got differentiated by person to person, right? Now, if we apply the similar logic in stock market, what we could derive was a number series that had the ratios which could able to generate the patterns. Now these ratios are fixed, hence it can be mathematically expanded to the infinity. So this number starts from 0, this number starts from 0, 1, and it goes to infinity. So one of these bone number is 1415. Now these bone numbers are always static, and they are static across anything in the world. So I'm going to talk about these bone numbers for a bit, and then we move to the aesthetic part. Now there is a bone number called 1415. Now look at this S&P 500 daily chart. In the year 2012, from March to May, it was flirting with that 1415 number for quite a bit. Ultimately, it tested that number, couldn't sustain above it, and S&P 500 came crashing down. Okay. How does Shanghai Composite at one point in time reacted at 1415? In the year 1999 and 2000, it flirted with 1415, which is our static bone number, so many times. And ultimately, the direction in which it is closing and trending actually decided the direction for a longer bit of time. So here, as we see, tried, couldn't go past this one, came crashing down. Again, it tried here, went up here, again came back, tested, able to survive above this line, and it made a rally towards the next bone number. So let me point also here that since these bone numbers are infinite, that means if a stock is crossing 1415, it technically goes to the next orbit number, the next bone number. That means I already know what is the next target of that number, if it is going up or down. Check out the gold futures weekly chart on COMEX. From 2011 to 2014, 1415 line, I'm drawing it here. And you can see many a times it just took a support from that level. It bounced back quite a bit, almost to the 1900 levels. Then again, it got tested here. It came back crashing down, tested here, cannot sustain, came back to sub 1100 sort of levels. So again, this is just one example of a bone number, which, remind you, is nothing but ratios and patterns. It is static. Bones are static. What differentiates the movement across individual stock is the aesthetics. Now, aesthetics numbers are actually the patterns that are developing in a particular stock. They come up with their own set of aesthetic formulas. So bone and aesthetics together, the fixed set of numbers and the dynamic set of numbers, they come together and they determine where my stock market or a particular stock is moving. Interesting, isn't it? Now there is another bone number, 25,626. Here is an example of a weekly chart, Nifty Bank Index, trading in India. Look at the parity. The moment I'm holding about to this, in fact, I take a precise low, I go up almost 3,000 points from that level. I came back crashing down, I closed below, I started closing below. The moment I start going up is a change of parity, I am again long. And from 25,000 level, it has actually achieved 31,000 level. Of course, there are in between the bone and aesthetics number that are falling there. But it is just one stock, it is just one index which is trading on, say, Indian stock markets. Has it any correlation to other stock markets that are happening around the globe? Hang Seng, okay? Look at this. Here, there is a change of parity. Till the time this 25,626 was a resistance, now it is acting as a support, and the market is going up. Again, this number is nothing but ratios and patterns, but it is fixed. What is happening here is the aesthetics, that part is coming into play. The aesthetics would also be the numbers they are forming here, so that I have the combination of a bone number and the aesthetic number. And based on those, if I'm trending above, I go long. If I'm trending below, I go short, as simple as that. Look at here. And this is the recent market crash that is happening in Hong Kong. And 25.626 was the precise high. After that, the market even today is not able to cross it above. How about Dow Jones Industrial Language, the mother of everything? Look at this, how it is behaving, making a precise low here, going up from 25,000 level to almost 29,500 level. Now come back, crashing down below that level, not able to sustain, closing below, it is going to the next set of numbers. So I'm sharing with you two discoveries today. One is from the pure data science perspective, I'm trying to find the hidden formulas that exist which can actually track the direction of the stock market, and bone and aesthetic discoveries, which actually are the most surprising factor, which defines one world, one algorithm. So just using one set of data, one set of formulas, one set of algorithm, I can actually trade any stock market in the world. Now, these kind of discoveries in data science can actually redefine the entire asset management industry. Think about the ETFs, the spider. If I know the S&P 500 movement, I'm already tracking the spider movement, and it's a big industry, right? So the correlated investments, like the ETFs, my deployment and exit strategies, I already know the defined numbers well before the market is making a volatility against the news flows, the macro news, the micro news, the geopolitical scenarios that are happening. Even though every bit of this information is available in public domain, but still, if there is a bone number, if there is an aesthetic number, those ratios are still holding true, and that's the miracle. And even at the day-to-day level, the trading and execution level, we can define very well-defined strategies just based on these set of numbers. According to A.T. Kearney, $2.2 trillion in assets will be managed by robo-advisors by 2020. We are already in 2020. Now, what we are asking, a simple question, is our robo really finding what is apparently not there? Because if it is not able to find apparently what is not there, my robo may not be able to tell me 12,432 is your top. It may not be able to tell me gold is crossing below 1415, so you need to exit. So my robo advisors are actually as good as the data science methodologies that I'm actually feeding to him, right? They say data is a new oil. Let me change it a bit. Data is such a new oil that the price of which may not fall below zero. So on this lighter note, I would like to end this presentation. I thank you for attending my session today. If you have any questions regarding this, just drop me a note at saurabh@numbler.com. Stay healthy, stay safe. Thank you so much.